So welcome everybody. We are very excited that you are joining us today for this hot topic briefing led by the Emerging Payments Association in Asia on the topic of rise of debit card in Asia Pacific. And EPA Asia is a branch organization for all participants in the payment industry. And we've been around since 2004 in UK and have more than 150 members on a global basis. But we are new in Asia. We launched in October last year. And our vision is to lead the world in enabling payments to improve lives everywhere. And we do that through a few different kind of activities. It's like events like today. And they are organized by myself. I'm the Director General for the events and the community. And we do hot topic briefings like today, which is knowledge sharing and staying on top of the trends in the industry. We also do in-person networking events, which we call EPA at Homes. And they always also have an element of content creation and knowledge sharing in a way of a panel or a round table. We recently been running roundtables on the topic of open banking, both in Hong Kong and Singapore. And the other stream of activities that we have are our projects. That's when we're creating a platform for the industry to talk with one unified voice and to create policy to move the industry forward. And we're running one such project now, which is open banking in Asia, and hence the roundtables we've been running. And we're doing this project in collaboration with the APFF, which is the Asia Pacific Financial Forum, and who are the advisor body for the finance ministers in Asia Pacific. So lots of exciting things going on within the Emerging Payments Association Asia. But today we're going to talk about the rise of debit cards. And I have a panel with me, and I have a presenter who is Lance Blockley. He is a well-known payments profile both in Australia and across Asia. We could call him an industry veteran with 35 years of senior management experience in UK, USA, Asia, and Australia. And he's also, or him and his team were behind removing the signatures on card payments in Australia. So thank you very much for that, Lance.
Thank you, Camilla.
Good. And before I hand over to you, I just want to say to everybody on the call that please write in questions and we will take them at the end of the call. But now I will hand over to Lance to introduce the panel of today.
Thank you, Camilla. Thank you for the introduction, and welcome to everybody to the webinar. So with me today, I have Vincent Ling, who is Deputy General Manager for Southeast Asia at UnionPay International, obviously a well-known scheme throughout Asia Pacific. And also Matthew Wood, who is Head of Product for Visa in Hong Kong and Taiwan. He's based in Hong Kong, and Vincent is actually joining us from Manila this evening. So welcome, gentlemen.
Hey Lance, how you going? Great to speak to you.
Thanks, Matt.
Hi Lance, how are you? Great, and thanks for the introduction.
No problem. Thanks, Vincent. So just as an opener for this topic, in the 5 years to 2015, the number of debit cards on issue in Asia Pacific increased more than 3 times. That was huge growth during that period. And indeed, the growth in accounts has continued since then, but transaction growth has now taken over as the metric to watch, as debit cards have moved from what initially was ATM usage more to point of sale, as well as being embedded in-app and used in e-commerce, as cash transactions are displaced in the markets. So in this webinar, the aim is to explore this explosive growth with the senior managers, both from UnionPay International and Visa, uh, and to see what's been happening more recently and what the forecast is for the future. So I might start with you, Vincent, if I may, because Union Pay has been the scheme with the most debit cards on issue globally for many years. But historically, some people in the media have said that many of these cards have had no or low activity and only got used at ATM. But I think that's been changing. So how has that been altering in the recent past, and what is the situation today? Over to you, Vincent.
Yes, thank you, Lance, and good evening, good afternoon, everybody. Basically, I think you're right in saying that in the past 5 years, the growth of debit card, in the past 5 years till 2015, there's been a strong growth of debit card. In fact, I'm here today in Manila, and we have just launched 2 new issuing banks that will issue debit cards in the Philippines as well, which is at one of the key centers of transformation from cash to cashless and from various products and including debit as well. So, yep, I guess I'll come to your question in that sense that we are actually witnessing a true shift of spend that's actually moving towards from ATM to POS as well as online spend based on our study and our internal data. And some of the stats to share with everybody is that for the past 3 years that we have done some checks and study, the amount of spend or transaction through ATM has come down by about, on a comparison basis, down by 7 percentage points. And that has actually transferred to both POS spend as well as online spend.
Right. So I think initially, when you give somebody a debit card, historically at least, their first usage is to pull out of ATM, but it sounds like you're definitely seeing a shift away from that now to people using these to make purchases and online transactions.
Right. And at the same token, I think we have also done the study and look at how is the debit card being used. So we look at it from the perspective of whether is it done locally or is it done overseas. So from our standpoint, if you look at the same years that we are looking at for the past 3 years, we are seeing a shift as well of spend heading overseas rather than heading overseas. So we saw an increase about 9 percentage points that is actually moved from overseas, and a decrease in local usage as well, which is in that sense good for in our opinion, because we love overseas and cross-border transactions.
Yeah. So moving on to you, Matt. I mean, Visa has also been busy issuing debit cards across Asia Pacific. And as we said, in many countries, initially people use that at ATM because they're still used to using cash. But how have you been going about convincing the new cardholders to use the cards at point of sale and online? I mean, have you been running promotions on that, or have consumers just sort of made that move themselves?
Yeah, I mean, indeed, Lance, we've been working with our clients to issue debit in the region over a number of years. I think what's really fascinating for all of us as payment practitioners is that the growth and mass adoption of debit has played out in so many different ways in different markets. For instance, to touch on a couple, Australia, a market that you know well, Lance, I mean, the uptick in scheme debit beyond sort of ATM usage can be linked back to the mass rollout of contactless enabled POS terminals, for instance, which changed the behavior of consumers at the point of sale. Whereas in Taiwan, to pick another market as a comparison, Taiwan has a very high debit usage today, but the drivers were very different. So as far back as 2004, there was a regulator-led mandate towards chip ATM cards, which prompted the banks at that stage to, mass convert magstripe cards to chip debit, which effectively saturated the market with debit cards that worked in ATMs, but of course POS and online, and that in turn then changed the way consumers had used those products. So very different two examples there, but I think in both those markets and as in elsewhere, there are other macro factors at play which we should sort of touch on. I think the rise of e-commerce has also been a factor, and in a more broad sense, the GFC actually had a fairly significant role to play as consumers deleveraged, credit growth started to slow, the use of credit cards were sort of tapered with respect to debit then picking up the slack. But what's common in that, and this is Visa's focus, is to deliver debit solutions with very strong value propositions, supported by digital capabilities, and really key is broad acceptance, both physically and online, and domestically and abroad.
I know that some of your clients, because I did some work on this myself, for example, Bank Mandiri in Indonesia, spent quite a lot of time and effort in promoting use at point of sale, with sort of simple promotions of use your debit card at this shop 3 times and you get some free gift. Do you think those had an effect, or would people have migrated to point of sale anyway?
No, I think those sorts of tactical measures certainly have a role to play, Lance, because the purchase experience is something that's really driven by, in amongst many things, driven by habit. So if you can habituate that spend, that behavior by dangling the carrot of offers or benefits, then that's certainly one way to drive that adoption. And like I say, in Australia, for instance, the rollout of contactless terminals started to habituate that everyday use of debit because it was so simple to tap. In other markets, transit's been the driver. So there's a number of levers that issuers may pull, but really driving that habit-forming behavior is super key. And interestingly, although not solely a debit question, we're starting to see the same types of things play out with the use of mobile today, in terms of trying to drive that habituation of consumers to use mobile instead of plastic.
Yep. I've definitely been encouraged to use it on the Sydney transit system by certain discounts, so I can see that happening. But behind the growth of debit cards across the region, there's also been sort of growth in overall financial inclusion, and many governments have been pushing financial inclusion, which leads to people having more transaction bank accounts and therefore the associated card. How has that varied? Because obviously Asia Pacific's not a very homogeneous single market. It's made up of lots of different country markets. Have either of you got thoughts on that?
So Lance, hi. We do a lot of financial inclusion work across the region, and we also done a lot of research. So one of the key research that we have leaned on, particularly for today's conversation, is one of the OECD's report with titled "Financial Inclusion and Consumer Empowerment in Southeast Asia." So if we were to pick the top 3 countries that makes up more than half of the population in Southeast Asia, namely Indonesia, Philippines, and Vietnam, they all have a strong growth, but I think the growth is actually very uneven at best. If you look at Vietnam, there was a growth of deposit accounts of from 2010 to 2015. There was a growth of 200%. In Indonesia, there is a growth of 76%, but whereas in the Philippines, is only a growth of 30%. We do actually see that this is indeed driving the growth of some of our business as well. And obviously, as I mentioned at the start of the call, I'm here today in Philippines because of precisely some of the launches that we are having here today. But if you look at it, besides debit card, we also actually feel that the prepaid card is also a fairly economical way a pathway to actually to move financial inclusion. In speaking to one of the CEO of the banks today, they feel that namely debit cards has some associated costs due to the management of the CASA system. And because the deposits are treated differently, they're on balance sheet. Some of the banks here actually operate prepaid card as an off-balance sheet project or off-balance sheet product. So there will be some associated cost savings as a result of going to prepaid card. And we do feel that prepaid is also one of the ways that we can actually move forward to improve financial inclusion, especially in those markets that has a very low bank population.
Thank you. And Matthew?
Yeah, just a couple of thoughts on that as well, Lance. So I think, stepping back, this region is home to more than half the world's unbanked population. I mean, that's extraordinary, isn't it? And like you say, it's an incredibly diverse region. But the digitization of payments is one of the surest ways to address that. If you're getting paid in cash, you don't necessarily need a bank account or indeed a debit card or a prepaid card, as Vincent said. So debit is a really useful tool to help solve for that. No need for credit worthiness checks. It can be issued to people of a lower age, which helps to build financial education. And even in mature markets with highly banked populations, I think governments are starting to look at the innovation around debit and the digital capabilities that can be built on top of it to solve problems around social services. And the cashless welfare card in Australia is an example of that. So certainly, I think where there's unbanked populations, governments will always be motivated to try and elevate them, and tools like debit can really help to serve that purpose.
And what are your views, Matt, from a Visa point of view on the prepaid side? Are you seeing, like Vincent, a move by some banks to push the prepaid offer?
Yeah, I think where we're seeing, I guess, momentum and interest in prepaid playing out in this part of the world, as it's played out in Europe as well, is for sort of new digital players, emerging issuers, the neobanks, if you like, who have seen prepaid, for many of the reasons that Vincent just described, as an easier path to market. The regulatory barriers to entry are typically lower. The sort of card management infrastructure that's required can be more easily stood up or potentially outsourced. And so in terms of providing payment tools, getting payment credentials in their consumers' hands, starting to build scale and bring on a large number of customers, prepaid is seen as a kind of really neat way of doing that.
And as was mentioned earlier, I mean, there's been tremendous growth in e-commerce across the region. In fact, we did a study, I think last year, the average growth rate was about 20% across Asia Pacific, with some mature markets like Japan having much lower growth and others like China having much stronger growth. How has e-commerce growth impacted debit card usage, and do people feel comfortable putting their debit credentials into an online merchant?
Certainly, I guess, I think there are a couple of things at play here. I think the number of e-commerce merchants has probably increased significantly over the past few years. I think if you look at the likes of Grab and Uber and some of these food delivery services, they have just mushroomed over the past couple of years. Obviously, the acceptance of debit cards in e-commerce is fueled by the fact that consumers are actually getting much comfortable in terms of buying stuff over the internet. Also, at the same time, it's also driven by the fact that there are a lot more services and products that you can buy over the internet or the e-commerce today. So that is certainly driven the usage. That said, I guess, especially our experience is the fact that, especially in the countries up in the Mekong area delta, the Cambodias, the Laos, and the Myanmar, and countries like this, where there is a little bit of not so developed credit bureau and not so developed credit card, banks are actually preferring to issue debit cards, and as a result of that, that has actually pushed the transactions to move from credit, obviously, then to debit. What we are seeing here is that, especially the younger consumers, we have done some study. They are very comfortable in transacting online. Given some of these latest products and services that probably didn't existed when they were younger. So absolutely comfortable, and that's why it has positively impacted the use of debit card of late.
And Matt, Visa has been pushing tokenization. Do you think that's helping overcome some of these barriers?
Yeah, it is, but I think it's one of a number of ways that this question you asked about security needs to be addressed. I mean, again, it varies by market, but for instance, in markets like Taiwan and Singapore, we're actually seeing a higher e-com spend on debit products today as compared to credit. And while, as you point out, sort of e-com generally running at CAGR of more than 20%, in markets like Philippines, Thailand, Vietnam, there's actually still a really large share of cash on delivery. So the dynamics are very different. And as to, how to address the security concerns, I mean, firstly, from a rules perspective at Visa, of course, we have the zero liability principle, right? So, that requires education for consumers and awareness, but is a really important protection for consumers and builds that trust. The tokenization work is more structural and is something that has really started to play a significant role in shoring up the e-com space from fraud. So, as you touched on, the industry is working really hard through the MVCO and with the Secure Remote Commerce Standard to scale that tokenization-based solution into the e-com space and really bring effectively EMV-like security that we see in the card present world to the card not present world, and Visa has been driving that for playing a really driving role there. I think lastly, though, it's important to point out that issuers have to play a role here in terms of customer experiences. So things like card controls, like being able to toggle off different types of purchases, including e-commerce, providing instant notifications when a transaction occurs. These are some of the things that just reinforce the security of those payment methods. And frankly, across the region, some issuers have a really long way to go there.
And we're seeing, as you rightly mentioned, a sort of deleveraging or move away from credit into debit, particularly acute in the Australian market. But that's brought with it all these buy now, pay later type services, most of which are fueled by debit cards, because we're seeing young people not wanting to move into credit and instead gaining an effective credit period by going in with buy now, pay later. Is that something that the two of you have seen growing up through the region too, up into the Asian markets?
So Matt here, I'll jump in there. So I think, you know, the buy now, pay later phenomenon is really fascinating, right? And you're right, it's largely been a debit story so far. You know, regarding the first part of your question, I mean, as you've spoken about, the growth in debit sort of runs tightly with the growth in acceptance, and on the installments piece, that's really another acceptance innovation. But you know, in one sense, there's kind of nothing new here. You know, I remember going to with my mum to department stores as a kid to collect the lay-by, and you know, lots of card issuers across the region have had installment capabilities of some sort for some time. Largely, they've been post-purchase, and they've always been on credit. But they haven't taken off because they've been so sort of disconnected from the purchase moment. So you know, I think for you know, what we're seeing with younger consumers is developing a different relationship with credit. You know, essentially, these buy now, pay later services that you speak of are a form of credit, but our research tells us that consumers don't necessarily see it like that. You know, I'm not borrowing, I'm being savvy, I'm managing my cash flow. So, you know, for issuers and for merchants, again, the key is choice in payment methods, credit or debit, buy now or pay later. And that's what we've recently announced at Visa with our recent announcement of a suite of installment APIs for all parties to connect to provide those customer choices.
Yeah, but I think the difference between your offer and someone like Afterpay is that the consumer ends up paying for the facility.
Well, not necessarily, Lance. So our solutions are really designed for issuers and merchants. For us, it's an ecosystem play, essentially, right? So we're not building the business model where we're providing the rails, such that be it issuers, acquirers, or merchants can build the solutions on top of that and build out the economics that they choose to.
And Vincent, are you seeing a growth in these buy now, pay later services in the markets that you're operating in?
Sorry, I just want to clarify a little bit. What's your guys' definition of pay later?
Well, really, the sort of the front runner in the Australian market is Afterpay, where you make the purchase and then you make 4 payments every 2 weeks after that. Okay. It costs the consumer nothing, but the merchant actually pays between a 4 and a 6% fee for the pleasure of making that sale.
That's we call it the installment payment across the region. I think that's been done for a very, very long time in Singapore, across Southeast Asia as well. To be honest, we are not seeing too much of that particular growth, although we are at the exploratory stage where we may want to launch, and we're exploring a product where we allow something interesting such as a cross-border pay later. So we believe that will be something will be interesting, and we are doing some tests and some research around it as well.
And of course, these buy now, pay later services, most of them are apps that people download onto their mobile, which leads us into sort of the in-app payment sector, which is growing at a huge rate. I think one of you mentioned Uber before, and Grab, and these in-app payments are definitely taking off. Are people loading debit credentials into those apps? Or I think, Matt, you had a comment in a previous discussion about whether it's merchant initiated or consumer initiated. Perhaps you want to explore that. You there, Matt?
No, I was just muted. Sorry. So look, I think so. Let's kind of explore that a little. The difference between consumer initiated versus merchant initiated in these kind of in-app or credential on file scenarios you talk about. So, an example of consumer initiated is the Uber type experience, or Hey You in Australia, for instance, where I've loaded my payment credential to the app. I don't have to enter it each time I transact, so it's really convenient, but I'm only charged when I take the ride or I buy the coffee, right? So I initiate the transaction. Merchant initiated is more the Netflix type of solution. My payment credential is stored and used by the merchant when they initiate the charge. So it's a generalization, and fully appreciate it's always dangerous to generalize, but what we are seeing in a general sense is that consumers tend to prefer credit for merchant initiated transactions, and for consumer initiated transactions they prefer debit. And our hypothesis there is that that's related to control. I'm more comfortable to use my own money when I control the moment at which I'm charged. But of course, as I say, that's a generalization, and the important thing for merchants and payment providers is really to support both, because that's really the choice that consumers expect.
Are you seeing the same thing, Vincent, with the in-app payments? Is it?
We have actually seen almost the same kind of thing. I think not much of nothing further else to add in that particular area, actually.
So one of the things that seems to have happened with contactless debit is that in some markets it's come under competition, if you like, from QR code payments. So it's a different form of payment. And is that a problem, or is it actually the debit credentials that are funding the QR transaction? And Vincent, this has really occurred obviously a lot in the China market, but also throughout Southeast Asia.
Yep. What has happened is that we are also expanding rapidly for the QR transactions across the region. I think we have actually rolled out many QR acceptance terminals across the whole region, and at the same time we are also having lots of issuers as actually becoming a QR and at the same time basically a virtual card issuing. So yeah, we are actually seeing lots of QR code transactions as growing strongly. Is at its infancy, so the statistics are tremendous, but there's no point because the base is still a very fast-growing segment. But honestly, we do see that contactless is not coming under competition or whatsoever. QR code is just one of the methods of interacting with a terminal. Contactless previously depends on NFC, and I think QR is just one of the ways that we interact with the terminal via the optical camera or the basic camera of the smartphone. So in that sense, with the widespread growth of smartphones in the region and growing affluence, we see that consumers is actually adopting mobile payments or mobile wallets, if you will, and that's actually helping the growth of QR transactions. Central banks has also started to recognize the potential of QR and has been purposeful in driving the adoption of QR code payments via especially the standardization of QR standards, such as, in Singapore, there's SGQR, and in Thailand, there's THQRC. And in both committees, in both of these working groups, UnionPay is party to the part of the central committee, steering to help and to grow and to develop the standards with some of these working groups.
I mean, as you might know, I represented a number of banks against Apple at the competition tribunal here in Australia. because of their lockout of the NFC interface to Apple Pay. Do you think that that quarantining of the NFC interface on the iPhone is partly what's driven people to QR codes because it's a way around that issue?
Lance, I don't think that's been a key driver. I think the key driver is the cost effectiveness of the QR code and the adaptability of the QR code. There are, at its most basic, QR code is actually can be implemented easily. I mean, if we take away the security and things like that, it is actually a QR code can be as easily as a printed sticker that's stuck on your stuck on the merchant's door, and payment can be effected as a result of that. So not really. I really don't think so. And I think QR code is obviously the next wave in small payments because of the cost effectiveness, and especially with the strong proliferation of smart mobile phones across the region. And QR code doesn't need to have a lot of strong demand on the phone itself. All you need is actually a camera and a browser, and obviously a data connection. It is simple to implement, unlike some of this NFC secure element and stuff like that within the phone set. So that's our my view in that particular area.
So QR code's definitely driven an expansion, if you like, of acceptance because it's a simple way of taking a payment.
Exactly.
I actually, I mean, I think here, Lance, that both are true. You know, and just to sort of move away a little bit from the Asia Pacific story, but you know, if you look at the way QR's played out in other parts of the world, in the US in particular, with the evolution of Chase Pay and Walmart Pay and other such things, I think that QR was definitely seen to be a superior form factor for strategic reasons because it is device agnostic. But I absolutely agree that it's not a question of debit versus QR, or QR versus credit, or even QR versus NFC. I think it's certainly QR versus cash, and where we started to see QR play a role is where the acceptance infrastructure has had gaps, where electronic payments weren't possible. And outside of mainland China, as you point out, that has largely been at very small merchants, the very long tail, and has been predominantly a cash displacement story. But I think what we'll see as acceptance moves from hardware to software, so think soft POS, tap to phone and the like, we'll certainly see more traditional, let's say, card-based payments have an impact in that longer tail merchant acceptance sector. I do believe the NFC experience is a superior one, but I do think software-based acceptance will be a game changer. And those on the phone today may have seen some news recently about Visa's work in this space. Some media releases over the last couple of days, and it's for that very reason that we just outlined, that cash represents such a huge opportunity still, and software-based acceptance is really going to change the way small businesses take payments.
So that leads me on to sort of what do we think is going to happen in the future in terms of growth of debit card numbers and transactions, and what are going to be the driving forces behind those trends? Vincent, your thoughts on that?
I would just like to say that the debit cards will continue to grow, and that's one of our key focus areas in several of the key markets across Southeast Asia. We are seeing banks, they are actually pushing debit cards to replace the ATM cards. Obviously, it is potential to drive greater revenues. At the same time, I do see that, in order for us, and especially for UnionPay, to encourage debit use, across the region. I think we are now allowing, or rather, it has always been there. We are encouraging all the debit cards to be used at POS because we do have a lot of privileges and a lot of sales offers throughout the region globally. And at any one time, we do have like 1,000 or more than 1,000 plus privileges across the region. So from that perspective, in fact, sometimes bringing your debit card abroad and paying with Union Pay actually might even save you some money. So as a result of that, we are actually giving customers and card members more reason to carry their debit cards when they're traveling. And we are also seeing a lot of issuers to roll out attractive schemes and such as rewards and cashback, and we have spoken about Pay Later just now. And this is obviously all to encourage POS, POS transactions. So we do see a very strong increase, and we are seeing this as a very strong focus of our business moving forward. I did mention just now that prepaid is obviously another one of the ways, but certainly these two products will actually do go hand in hand. Most of the time when we speak to banks, especially in the developing countries, these two products always come into focus.
And Matt, your thoughts on the future?
Where is debit growth headed? So as I stare into my crystal ball, Lance, I think we will continue to see significant growth in all electronic payments, actually, be it credit or debit or prepaid or other. Why? Well, I think we'll see the shift from offline to online continue, and those remote commerce experiences will become more and more important. E-commerce will continue to increase significantly as a result. I think technology advancement on the acceptance side will continue to spur the electronification of payments that are primarily cash today. There'll always be a sector of society that is attracted to the anonymity of cash, but governments and regulators will certainly continue to drive an agenda around cashlessness. And therefore participation in financial services and inclusion will continue to rise. So when you look at the impact of all of those trends, you can see how important debit-based payments solutions will be into the future.
Okay. And
what about one more point to add on my side is that we are seeing some governments across the region putting further putting restrictions on the growth of the credit card. So I think the key is they are trying to deleverage the customers. So as a result of that deleverage, we are seeing that shift in certain markets moving away from credit to the debit portfolio. So to sum up, I would say that whatever Matt has put in, I would just also add in the fact that overall the region is economic growth is growing healthily. We do see some headwinds, obviously, some due to some geopolitical and events across the region. But overall, I think the picture is still fairly rosy, relatively rosy. So as a result of that, if you look at all the stuff that we have been speaking about, I think debit will still grow, and it will grow significantly for all of us across various brands across the industry.
And what about any threats to debit? Is there anything that could potentially in the next 3 to 5 years take the place of the debit card as another mainstream payment product?
So look, Lance, I think to really break it down, debit just means using my own money to buy stuff, and everything else is form factor, really, isn't it? So we see those sort of desires playing out in cash usage in a market like Hong Kong, with Octopus being used beyond transit. So the desire of consumers to use their own funds, their own money to buy stuff is there. I sort of predict, in terms of what comes next, I predict we'll see continued innovation in and around authentication. So we're seeing that today with things like biometrics and voice, etc. I think that we'll see lots of new innovation in that space. I predict that we'll start to see innovation around the convergence of debit and credit, where the type of purchase drives the funding source. And I think that's something that consumers probably don't even know that they want yet. I think that the innovation in that space will probably be led by new entrants rather than incumbents. And I think we'll continue to see payments become more and more embedded within experiences. But fundamentally, whilst ever consumers want to use their own money to buy stuff, I don't think debit is going anywhere fast.
Okay. Well, I think
on my end, I would say that debit will be a mainstay, but we do see that as what Matt has pointed out, it could be authentication. And our thoughts around this is that we will not see the debit card, being threatened. I mean, obviously there will be new entrants. We really don't know what the future will hold, but one of the things that we are looking at is the oncoming wave of digitalization. We do see virtual cards, virtual twin of the debit card, coming out as one of the key innovation. But certainly there are many players trying to chip away at this pie. I think this players that are not necessarily a traditional scheme. There are some platforms, they may one day be may grow significant enough to threaten a little bit in terms of the debit card.
okay. Well, I don't see any further questions from the attendees. And I want to thank you two gentlemen immensely for providing your time and knowledge and input into this discussion. And with that, I will hand back to Camilla to conclude the session. Thank you.
Thanks, Lance.
Thank you very much, gentlemen. That was a very comprehensive discussion around the debit cards and many deep dives, and exciting to see where we're going to go in the future. As often when we're running those hot topics or any of our presentation, it's still new questions pops up, and I'm sure this is a subject that we're going to revisit in the future. But for now, many thanks to Lance, Vincent, and Matt. And just before we round up the session, I just want to say a few events that's coming up. Okay. So for our members, we're running a Milken Institute roundtable session together with the Milken Institute in Singapore next week. And the topic is payments in the 21st century. On the 10th of October, we're having a members event in Sydney. And that is a summary of our study tour that took place in June to Sweden, the Cashless Society. Really interesting. Lance is also participating in this session, where we're going to take the key findings from the study tour and apply them on how does the industry look in Australia and in Asia. On the 10th of November, we're running a PayTech for executives, a PayTech pitching competition in Singapore. It's on the Sunday before the FinTech Festival is kicking off. So anybody on the call that wants to get involved, let us know. Either write an email or a message on LinkedIn is our preferred channel. On LinkedIn, if you follow us, you will also see all other topics coming up. We will summarize this event from the day, and that will come out on the newsletter in October. And sorry, coughing attack. And on that note, I think I will end this session. So thank you very much, and I hope to speak to you soon again.
Thank you.